Morning, everyone. Welcome back to another live session. Today's Tuesday, the 2nd of May. Appreciate everyone turning up yesterday evening for the induction. Do me a favor and go ahead, watch it if you haven't. Just serve and mute someone. There we go. Go ahead and watch the recording of the induction if it's something that you couldn't attend live. It was purely just a bit of a mental recalibration and 2 simulations that I'd like everyone to do for psychological purposes. Today we had a bit of a shocker from the RBA. Reserve Bank of Australia rose interest rates marginally unexpected versus their previous event where they kept rates the same. They reiterated that inflation's slowing down. Inflation remains high, but it is slowing down, and they too felt like they should reduce their tightening. Right? Reduce their tightening. Remember, like a screw and a screwdriver, if you go ahead and you tighten a screw too much, you're going to go ahead and wear out the head. So if you ever want to unwind that screwdriver, or that screw, you can't because the head's worn out. Tightening from a central bank's the same thing. They can't over tighten because then you're really going to break everything. Right? Banks will go bust. There'll be no money in the system, and they don't want that. Right? So them pausing reminds us that even if the Fed are going to pause in the next coming months, nothing's stopping the Fed from hiking again. Same with the Bank of England, same with the Bank of Canada. Right, we know the Bank of Canada followed along with the RBA. And it's good that this stuff happens, right? It's good that it's not always as textbook as we want it to be. So we can be prepared when these things happen. Let's go ahead and dissect, dollar firm on the day. Nothing major. Right, nothing major. We are still, in my opinion, trapped within a range. Price is still held up at this 102 level. Every time we have been here, pretty much for 2 weeks of April, price rejected. So I'm not bullish on dollar long term yet until we actually break back above this range. I have it fairly thick for the reason that I'm not going to just take every price stab into it as bullish. I do understand that it's bullish on the day. Right, you got commodities lower. Silver yesterday, phenomenal. I don't even know what to think about it because it had such an illiquid move. It rallied out of nowhere. Gold too rallied straight into the highs and completely tanked. We know on the daily time frame, gold is still stuck within this inside bar, and it has been for the past couple of trading days. Past 1, 2, 3, 4, 5, 6, 7, so about a week and a half's worth of trading. Stuck within this range, and I do think it is the Fed's fault. I do think we are on the eve of the FOMC, and things are gonna speed up tomorrow. We're either gonna have, the Fed come in line with expectations and risk tanks, dollar remains where it is, or the Fed are gonna throw a spanner in the works and say, you know what, given the pressure on the banking system, we may pause here. I've done my research, marginally expected that the Fed are at least going to tighten till about 5.75, which is another 75 basis points, which, if they carry on the way they're doing now, will be another 3 interest rate hikes. Will that happen? We don't know, right? Only Jerome Powell knows. Only the big chief knows. It's up to him and his committee to decide whether or not they feel further tightening is necessary. Inflation is coming down rapidly. I do expect inflation to be about 3-4% by the end of the year. Right? We look at the rate of change, it has fallen from 9.2 all the way, to where it is now. I think it just printed at 6 the other day. Right? 6 the other day. It's a massive, massive decline in inflation. We may actually be at around 5 already. 5 point something, I think it was. I can actually check here in the group. That's why I love this market updates thing, because I actually look at it almost every day. Just go back. PCE was firm. 2 seconds. So you can have a point of reference. I was hoping someone would know, but it is a hard number to remember. That's UK inflation. Bear with me. I also do post a lot of stuff in this chat. CPI year over for March expected 5.2. CPI came out at 5%. Sorry, 5%. So massive drop. So you've had a 4.2% drop in US inflation. So you can see how that's rapidly coming down. We're only 3% away from the Fed's target. So if you think about it this way, we've hit the high. We're already down 4% from the highs, and we're only 3% away from the Fed's target. If you look at the rate of change, right, rate of change is everything. And I do think that full demand destruction is really going to cause the Fed to put their foot on the brake anytime soon. My view on it is if they do raise now, there is going to be some sort of tonality going forward. Right, there is going to be some sort of hint, but we'll do a full Fed breakdown tomorrow. In terms of today, we want to really look at, the RBA and say, they paused at 3.6, marginally expected at 3.6. Aussie, if you look at the Aussie across the board was getting beat. Right, if you look at it, Aussie on a 4-hour time frame, Aussie was selling off the past few sessions because the RBA paused. Right, marginally unexpected. Yes, they rose rates. We had this rally. Would I per se buy Aussie dollar, US dollar? No, because I firmly believe in some sort of rally in the dollar over the next couple of weeks. But could you then, look at the likes of pound Aussie from where it is? I understand, we ran through this yesterday. Massively overbought, right? Massively overbought, straight into 190. For me personally, would I still go short from, let's say, 188 as even Moonwalker was running through on his charts? Possibly on an intraday basis, 188, if you look left, is a very, very big level. However, I also know and understand as much as I've wanted this lower, it hasn't happened yet. All right, so I'm going to use my macro view and I'm going to look at my bias and ask myself, which was my primary lesson. If you listened yesterday, was my primary lesson from April, that if my bias and the macro theme is not lining up, I'm wasting my time and I'm more than likely going to waste my money. So looking at pound Aussie, should we rebound at some point and get to 188? I understand the risk reward is perfect, but do I expect it to rally almost 200 pips? Possibly not. We may have, a short-term lift, 187, 187.50 before a bit of a roll. I understand that could happen. But for me, leaving that alone, I'm still for now going to be focusing on risk. That is my view. I like the FTSE from where it is. But yeah, we're going to cover that later in the video. We're going to finish the economic calendar so we can get it out the way. In a few minutes, we do have Eurozone CPI. I personally don't really understand, well, I do understand because of the Russia-Ukraine war that's put energy prices through the roof, which is why inflation remains such a problem. But with natural gas through the floor, if anyone has actually looked at natural gas recently, I'll show you a chart. Natural gas is absolutely through the floor. About 80%, it hit the low, roughly around 80% from the highs, lower. So natural gas hit the highs during the invasion of Russia-Ukraine, right? Massive rally in natural gas because of Nord Stream 2 and so forth. Once everyone around the world started to chip in with supply, there was not that much demand. We obviously had a warmer winter than expected, both in the UK and in Europe. So natural gas wasn't as scarce as what was expected. And when it was expected, we had this massive rally in natural gas. Natural gas is 80% off the highs. So inflation should come rapidly off the highs too. So me looking at the Eurozone, I see, expectation of 7% year over year for April. Do we come marginally lower? Then do expect Euro to take a dive. Euro across the board. Be that Euro dollar, we could see around 109 on Euro dollar if this happens today. 109 is only around 80 pips away. We could see 109. Euro yen, more than likely take a dive lower, 149 at the very, very least. And I know there's about 190 pips from where it is. But I do favor that happening should we have, it's not going to be in one direction or in one little move, but I do favor a move lower on the euro should we miss inflation. Why should we miss that print? Why do I say that? So the ECB, very similar now to the RBA, very similar to every other central bank, has kept super confident and super firm on their path because they're adamant that inflation still is going to remain a problem. If you look at rates for a second, rates in the ECB are 3.5%. They're more than likely still going to raise on Thursday by 50 basis points as expected, right? Take their rates to 4%. So they're catching up very quickly to the Bank of England and the Fed. But if inflation is rapidly cooling as quick as it is in the States, in Europe, then I do think we are going to be closer to the ECB slowing than we think. Now you want to look at this and say, as much as I want to start, trading currencies as much as I was in the start of the year, if there isn't something right now for me to do and it's just a gamble, then am I actually flipping the coin, so to speak? And that's the theory around that, right? Is my probability just a 50-50? Or do I have that greater edge? Do I have that probability? And if you don't have it, folks, there is simply no trade. Right? There simply is no trade. I understand April was tedious. I understand, we had this over-exaggerated rally in the yen pairs, which shouldn't have happened. Right? Marginally unexpected. But it is what it is. Right? It is what it is. We've got to face the music and just look at it for face value and say, if there is a trade, great. If there isn't, am I just trading for the sake of it? And I want all of you to ask yourself that question because, let's just say on your journey to get funded, you have to be active because you are required to hit 8% or 10% within the first month. But after that, your goal is to keep it alive, right? You don't want to be constantly aiming for those numbers because you're going to introduce greater probability for you to lose, right? So the more you trade, the quicker you're going to get through those 10 trades, right? You want to keep that in mind. Out of 10 trades, we don't know which is going to be a winner, which is going to be a loser. So if you are trading more, you're going to be introducing that probability of risk, right? Of more risk. So you want to just keep that in mind. So looking at the euro, I understand it has been very similar to gold, a sell the rally scenario. We've seen that with gold. I know Nathan's been killing it, selling the rallies out of 2000. Looking at euro, it's been the exact same thing. Any pop back above 110, 110 to 50 has been a good selling opportunity. So I'm going to look at this and say, all right, should we see any lift on the euro back into this little region? Yeah, right, which would line up with my fib. I'd love to short it. Right? I'd love a short up there around 110.20. Should we see that level? Let's get rid of some of this. Way too much stuff going on here. Should we see this level? I do favor a short. I favor a short, 30 pip stop, nothing more, nothing less, and I'd look to target the lows. I'd look to take these lows out. Minimum of 1 to 2, 1 to 3 at the very least. Right? If you do partake in the simulations that I have provided, you will then start to realize risk reward is everything. So should we see this rally in the euro, I do favor a short. Yesterday was quite clear, to be fair. But in terms of inflation, if we have a beat on the expectations, right? Let's say we print magically out of thin air at 7.5% on CPI inflation. I wouldn't want to short euro. I'm going to review it and look back and say, all right, we've got a strong CPI, which means we're going to have a strong and aggressive ECB. Don't sell the euro. Right, you go in, you're taking your bias that you want to happen because you have financial interest. We all have financial interest, yeah. Versus the actual narrative. Right, I understand it's tough to not mix the two, but it's going to happen. Right, it's going to happen. I'll quickly run through everything else, and then I want to watch inflation with you guys live on the call. Dollar CAD beautifully at the highs. I know Moonwalker gave that as well. 136.50, massive level on Dollar CAD. If anyone took that, I would recommend locking some gains in. It's not about what it is, it's about where it is. 135, maybe a bit of an area of intraday support before we have an attempt possibly back into, I'd say, 136.25, which could be another short opportunity over there. The yen pairs. Pound yen, euro yen still remain super firm. Like me looking at euro yen, I looked at it this morning saying 151. Like, are you crazy? 151 on euro yen is phenomenal to see. This is, I think, 30-year highs. No, 2008. Sorry. I'm looking at dollar yen, 30-year highs. But yeah, looking at where euro yen is phenomenal. Massive, massive level. Me just abiding to my technicals, I would short it from where it is. I would honestly start looking and shifting my mind to short. But at the same time, I know that we are where we are because things were marginally unexpected. So am I going to go ahead and jump on the back of that trade now? Or am I doing what I've done in April and taking my bias, which I have a financial interest in? Of course, we all do. Versus the actual story that's in front of me. So my job is to wait on my bias because I do favor it lower long term. If we see that full capitulation in risk, if that US recession starts to price in, we can have a rollover in everything. Reminder, no matter what China is trying to do, the US still remains the biggest economy in the world. Right around, I think, 33% of global GDP comes from America. So despite what everyone's trying to do, trying to dethrone them, they're still there. Right? They're still there. So me looking at euro yen, I need the narrative to change in my favor for me to shift into the mode of selling the rallies versus me attaching my ego and thinking, all right, I like it from where it is because let's be honest, I've liked it from where it is 400 pips ago. Right? It's rallied 400 pips against me, even though I liked it where it was 400 pips ago. Right? So look at it for face value and say, maybe I'm wrong. Right? Maybe I'm wrong. And it's okay to be wrong. No trader or no person involved in this game should ever be right all the time. You're never going to be. And if you are, you're on a streak and you're going to get humbled. So always at the forefront of everything that you're doing, and I'm going to have this as a daily reminder, manage your risk. Manage your risk. When you take part in those two simulations that I've given out for you, you'll realize that risk is everything. Right? You'll realize that risk is everything. And I hope a lot of you done my long-term vision, short-term steps exercise. I really hope you did. Otherwise, you are wasting your own time. You want to have that long-term vision in mind with what you're trying to do here with yourself. But you want to have those short-term actions that you're actually doing every day. Right? Every day. Be that something as small as drinking 2 liters of water, going to the gym, monitoring the economic calendar, staying on top of your stuff, understanding that now might not be a trading day for me. So important. I understand as a trader, you want it to be as exciting as entering all the time, constantly having skin in the game. But once you adapt and you've been in the game long enough, you'll realize it's not necessary. And the more exposure you have, the more probability you're introducing yourself to risk, the more money you're going to give back. You don't want to do that. Right? It's not fun. So me looking at euro yen, pound yen from where they are on a higher time frame, my view might be right, but it might take 3 to 4 weeks. The Bank of Japan have to tighten first. Boy, oh boy, when the Bank of Japan tighten, feel free to sell the rallies like we have throughout Q1. But coming into Q2, what worked in Q1 is not working right now. So stop trying to sell the rallies in the yen pairs and focus on, the developments. Look at something else or wait for there to be a development. Yes, if there's a trade intraday and you can bag your bag, take it. Right? You can bank that money, take it. Nothing's stopping you. But please don't be that individual that will throw money at a bias that is not working. Right? Forget technicals for a second and just think about why things are moving. Technicals are simply your risk reward, and that's it. Right? That's it. Gold, silver, obviously silver, phenomenal. Ran straight into previous highs. Very, very illiquid day yesterday. We know that it was a bank holiday and a public holiday all across the world. Workers' Day, if I'm not mistaken. That's what it's called, but we're still working, of course. We've got to grind. And looking at it, beautiful sell off out of the highs, but we spoke about this last week. That's a fade. A fade is where it has this irrational move that shouldn't be there. It just shouldn't be there. There was no reason at all that silver as a metal would have rallied over 2.5% yesterday out of thin air at 1 o'clock in the afternoon. Shouldn't have happened. And this is a fade because it's erased that move. So go ahead and screenshot this. Look at it, learn from it, and ask yourself, when you see these types of things, go look at the economic calendar, quickly browse through the news, go on Twitter, ask yourself, has something happened? Has there been an explosion? Has there been an invasion of Taiwan? What has happened for metals to have rallied the way they did? If there is nothing, it's a fade, right? You can fade that move, meaning wait for the slowdown, go in the opposite direction. It should not be there. It should not be there. We saw that last week with euro dollar. Euro dollar was this move up here on the high. This shouldn't have happened at the time, got erased immediately. And now that's obviously engulfed to the downside. We spoke about that on cable as well. Cable at the time, where was it? This move of year that shouldn't have happened, quickly got erased. So you always want to look at things, the session, why something's happening, the volume. Go ahead and look at the economic calendar, look at the news, right? What has happened, and then just go for it, right? Go for it. CPI out in 1 minute. Let's go ahead and watch this together. That's Italian. No one cares about the Italians. 7%. Let's refresh this. Is anyone's month-over-month figure loaded? Let me check on the side. Year-over-year 7, core CPI 5.6, so slightly lower than previous. Month-over-month dropped 0.7%. Yeah, so your month-over-month figure dropped slightly to 0.7%, this figure, yeah. So slightly weaker than expected. No real reaction on the euro, and how we see that is, there's no knee-jerk reaction. Pretty much marginally as expected. Dollar remains firm on the day, which has obviously put euro on the back foot in the London, pound on the back foot in the London. So nothing really to write home about. We'll take a look at euro yen. No real knee-jerk reaction over there. Euro Aussie was already down on the day because of the Aussie. So nothing really. Euro sterling. I see Denny has a euro sterling markup. I like it. We've tracked euro sterling for months this year, and it still remains elevated at these prices. So if you do have the scenario to sell the rallies on euro sterling, in my opinion, feel free. I feel if I have to look at the inflation differentials between the Eurozone and the UK inflation still remains above 10%. You got Eurozone inflation now at 7%. So if you look at it, there's a 3% difference, which means the Bank of England have more pressure than the ECB, which means they should remain firmer than the ECB for longer. So if you put those two together and you really look at the technicals, yeah, there is a sell the rally scenario on euro sterling out of these highs. So I like it. Should we see that high? Let's go ahead and add the alert together. I do like a bit of euro sterling. If you remember, I used to trade this quite a lot. So yeah, we'll introduce this again. Yeah, anything into 88.25, sell it. Right, 30 or 40 pips stop, depending on price action at the time, the slowdown, the prior trading day, the prior trading week, depending on how it looks. It's prior week. Weekly's bearish as hell. If we see those highs, feel free. Yeah, if we see that price, I'm sure. Going with a 40 pip stop. 8,700, first point of call. Take out these lows. But yeah, that prior trading week's uber bearish, very bearish, but extremely range bound, right? All Fed dependent. We know what will happen with the dollar tomorrow will dictate the euro's price as a basket. Why? Primarily around, I think, 67%. I don't want to lie to you on the number. So around 60 or 70% of the dollar index is the inverse of the euro, right? Because of global trade, everything is linked. Everything is linked. So looking at that on the weekly, beautiful evening star, shooting star, engulfing, Marubozu candle, call it what you want. Bearish. All right, bearish. So yeah, I like this. I'll take that. Two-step break, fib, area of interest. Yeah, whatever you want to call it. Why I'm making a joke about this is you will, once you do my two simulations, they're not mine, right? They're not mine. I've said they're not mine, but once you do those two simulations, let me know how you feel. It's amazing. For me, I might even do it again myself. I haven't done it in a couple of years, but it's just for fun. It's to show you that money management is your goal here. In any business, right? I've seen successful business people in South Africa that have millions to their name lose it all because of money management. So it doesn't matter how good your business is, or it doesn't matter how good your trading is. If you do not have money management principles, you will lose. If you are too tied to your emotions, not going to work. Unfortunately, trading requires us to be completely the opposite of what we're taught to be. We're taught to be conservative. We're taught to be, to hold ourselves down. But we can't be in trading. We've got to be loose. We've got to be free. We've got to be liquid. We have to be. No real reaction on the euro, to be honest, folks. I expected a bit more of a knee-jerk reaction. If we saw the highs of 110.20, I probably would have short it. But let's see. Right, let's see. Euro sterling. Shout out to Denny. It's just a good markup. Brought it back to my attention. Even if we see these little lows come and get retest, 88.1, that weekly is so bearish that it signals to me that we could have that continuation. But I understand price is extremely range bound. So it may even come and revisit the highs. Right? 88.50, 88.70. Can't happen. Right? There's nothing stopping it at all. FTSE. Right, let's run through the FTSE again. The weekly, not as bearish as I wanted it. Obviously, we printed fresh weekly lows. I would have obviously loved it to close at the lows. But it is what it is. We've got to look at it for face value. I still favor it from where it is. 7,800 was that area of interest for us to lock in those gains. But as a technical lesson, look at the lows getting broken. Forget it's the FTSE and just look at the price action for a second. Every time a low is taken out, we have these lifts in price. So don't be upset if you see this lift in price. It had that leg lower on the week. It needs that lift. It needs that lift. Gold. Wouldn't be surprised if we see $2,000 an ounce out of nowhere, because that's been the play these past few weeks. If you have taken advantage of it, please leave it alone. You're only going to poke a bear with a stick so many times before it fucks you up, and that's gold. Right, that's gold. So keep that in mind. Oil successfully closed the gap. If we came down into around $73 a barrel, I could possibly be involved in some longs again. I know I wanted long early on this year, which we capitalized on over a year. Not very much for me because I closed it out early. Yeah, I know a few of you. I know Morgan, no longer here, but he took advantage of that. And yeah, those times are going to come. Those heydays come and go. In the Bible, there is a story called the seven fat and the seven lean years, which is periods of highs and lows that you got to go through. Right, and I always refer back to trading as that. I always look at it and say, all right, April may have been slow, may have been boring, but maybe that was the lean years. You know, the better times are coming. Right, the better times are coming, and that's in markets. You have to constantly look for the next upside in something. So be ready. Right, be ready. Trading requires you to be ready all the time. Yeah. Massive rally. I don't believe this, to be fair. Massive, massive, massive rally. Think about it. If he was as dovish, or if it was as hawkish, excuse me, as people expected him to be, boy oh boy, we would have been at 160, if not lower, because you really would have seen big money jump on it. This is just unwinding of expectations, selling the yen that they have, you know, not buying the yen. So very big difference. Very big difference. It's amazing how the mind works. Crypto, Bitcoin, you know, beautiful little technical scenario. Yeah. What have we been speaking about recently? It's about the rate of change. Look at how slow, not slow, but look at the rate of change up. Look at the rate of change down. A lot quicker on the way down. So that is a bearish sell the rally scenario on BTC. Nice little follow through there. I do expect 25,000 on Bitcoin over the next few days. It is also Fed dependent. It now does trade as a risk asset, and it is a very big market cap. I think about, let me get it up here. I think it's about 500. Is it 500 billion?
Marco, can you unmute Dino?
I can. Where is he? There he is. Yes, he's unmuted.
Cheers, bro.
Yeah, sorry, your mic was just echoing. And just for like the recording, I thought it would just be good to.
Oh, sorry. It's because I'm on my phone. Is it still echoing now?
Well, it echoes when I speak. No, it's not now.
All good now.
Yeah, all sorted.
Oh, cool. Yeah, I just wanted to speak about GA.
Yeah.
Obviously the interest rate. I was kind of expecting an interest rate hike. I did put in the trade setups that they potentially could raise. Reason being is because I spent about half an hour reading over the weekend, and on the RBA side, they were saying obviously we paused for April just to see some more figures and some more data to see when how aggressively we need to move forward with the rate. So they're kind of saying, you know, we've only paused for a month just to assess things. And then I obviously read a bit further, and if you look on the website, there's articles of talking about inflationary issues, like the price of like rental properties have, you know, skyrocketed, and you know there's not many rentals available for people, and just a few inflationary things. So I thought I read between the lines, and I thought I think they're probably going to raise.
Well, yeah, I saw you put that in, and you also did speak about it yesterday. I think it is worth asking yourself at that time, is it worth me having exposure on this? So yeah, I think going forward, times are going to be treacherous, times are going to be tough. The Federal Reserve have been saying for months that at some point this year they're going to need to pause and assess. We don't know when that is. We don't know how long they're going to pause. Do we use the framework that we've had now with the RBA for the Fed? Is it 1 month that they pause? Is it going to happen the same with the Bank of Canada? Right, if that happens, you want to short dollar CAD, carrying on shorting it. We just don't know. Right, we just don't know. If you do favor selling the rallies on pound Aussie. 188, 188, 250 remains areas of interest.
Yeah. So I took a sell on it. I set an alarm for 5:30. I woke up for like 5-10 minutes. That the 4-hour candle, that the big dump, it did fluctuate around a bit. I got in at a good point with like a 60 pip stop or something.
Oh, you shorted it?
Shorted it, yeah.
Good stuff.
So I've got like 2%. I'm like 2% up at the moment.
Nice. There
So
you
I'm
go.
gonna hold it. I feel. I'm gonna hold it to like 185. I feel.
What's it trading at now? Let me check here.
186.
Yeah, I mean, if 185 will more than likely get a hit. Good job.
Yeah.
Good job. I'm not sure if that will happen today. I would suggest taking it off before the FOMC tomorrow.
Yeah. Close before them.
If we have a massive dollar rally, Aussie will get hit. Despite the move today, it will just get faded. And GA might lift. You might see the 188 scenario. And I'd rather you lock in 220 pips now. Because where was your entry?
I'm not sure. Let me just have a look on IQ.
Well, wherever it may be, well, like let's say with a 60 pip stop, you're about a 1 to 3 already. Phenomenal.
Yeah, that's it. Yeah. So I'm like, like 2%. I'm like 2% up.
It's not bad. It's not bad. And your risk.
I feel like there's not really a lot standing in its way. So, there's a lot of like liquidity down at 185.
Yeah. I mean, it will more than likely hit 185, to be fair. Looking at the rate of change.
Yeah, be patient, I feel. I think I'm just going to hold it because I think in the past, looking back at some of my trades the last month, I've just, I panic and not hold them for very long. So, realistically, I've only been in this fucking trade for a few hours. Like, why not hold it for a bit longer? Got nothing to lose, really.
Yeah, in my opinion, I would suggest you look at it at not the amount of time that you've held the position, but what it's given you. Because you can hold Euro USD for a couple of hours and it'll only give you 10 pips.
Yeah.
The catalyst for you to have been in this much profit in such a short amount of time was because the RBA raised unexpectedly.
Yeah, exactly, yeah.
So, yeah, good job. We're approaching 186. Yeah, it's good. Well done. I'm glad you followed your own plan. That's what I preach to everyone listening to this. Your focus, honestly, should be how can I remain disciplined? What do I see here? And how am I going to react to it?
Yeah.
No, good job.
Cheers, bro.
Journal that trade. I know we preach about journaling the losers, but not many of us journal the winners, because you wanna train your brain to see, what I got to do over and over again. We want those positive journals as well.
Yeah, I journal all my trades now.
Good.
Yeah, journal them all now. You can just see where you're at, and then you can look back and looking back at my the last 8 trades, looking how I could have potentially done them differently. I'm like, they're actually all really fucking good trades, other than the odd 1 or 2, but most of them were like winners. I just made silly mistakes, so they weren't winners.
That happens.
So,
that happens. But yeah, no, very, very good. I'm proud of you. Well done.
Cheers, bro.
Yeah, Euro on the back foot. I think we might miss this boat on Euro Sterling, but we'll review it. Right, we'll review it. It is at a good little intraday level. This is an inside bar, so hopefully we see the top end of that inside bar. Inside bar being this range here on Euro Sterling. Then that could be a good little short as well. But we'll keep it in mind. Anyone got anything else they're looking at? Oh, this level of support is horrendous. Let's see. yeah, risk shouldn't be here, to be fair. Massive bounce on the Nasdaq on those lows. Yeah, I think that's it really. We can obviously see that dollar has been as tedious as it was in January. If anyone remembers, these times were boring to trade. April, or the back end of April, was the exact same thing. Approaching the FOMC, should they raise rates as expected, and should they give, I wouldn't say a negative tone, but if they brush the banking scenario aside, no fear, right, more optimism, dollar's going to lift, risks are going to crack. But until then, right, do we care? Is it going to make a difference in 3 to 5 years? No. What makes a difference is how you react, how you manage your risk, and more importantly, how consistent you remain. That's the most important. So for the recording purposes, I'm going to end that now. If anyone has anything else to add, we'll cover it shortly.